A viewer of one of my videos recently wrote to me and asked, I don't own 100 shares of AT&T, but I want to sell a covered call before the next ex-dividend date. What can I do? As an options trader, you sometimes find yourself in a situation where there's a great opportunity to sell a covered call, but you just don't own the shares in order to do that. Fortunately, that's where the buy right strategy comes into play. Now get ready for some great action. I'm going to show you a real life example of me using the buy right option strategy. I'm going to take you step by step and show you how I acquired 100 shares at a price I wanted to pay, and then I used those same shares to sell a covered call. And the end result? My return on investment was 11%, giving me an annualized return of just over 60%. Does this sound like something you would like to do? Then be sure to watch this whole video and find out what it's all about. Now the buy right option strategy is actually pretty simple, and it only involves 3 separate steps. So in step number 1, you buy 100 shares of a stock that's well positioned to be a profitable covered call. Next, in step number 2, you write the covered call with the profit built in and you sell the option contract. And then in step number 3, when the option gets exercised, your shares get assigned and you collect the profit. One of the questions I always get asked about is whether or not this is a profitable strategy. Well, I'll tell you what I'm going to do. I'm going to share with you one of my real trades, show you my results, and then you can decide for yourself. Now, before I jump too deeply into it, let me give you a quick tip. Now, this strategy works, but one of the key success factors is being able to choose the right stock. Now, for me, I like to pick a stock based on several different factors. Number 1, I look at the company fundamentals. I also review the charts, and I'm looking for good companies that are currently in an oversold condition. Now, I've published a video that has 8 simple rules that I use for picking stocks. I'll leave a link in the description below so you can check it out for yourself. Now let's go through the steps, and I'll show you how I'm able to make money using the buy right option strategy. We'll start with step number 1, where I actually purchase the shares that I've identified as a great option play. Now in this real life example, here's a transaction record from my account history, where you can see that I actually submitted a limit buy order to purchase 100 shares of a stock. In this case, it's for Riot Blockchain Incorporated, stock symbol RIOT. Now I submitted this order on February 7th of 2022. To purchase 100 shares, and this order was filled that morning at 10:20 a.m. Pacific time. Now at the time that limit order was filled, I had to pay $17.95 per share. So when the total order was filled and executed, I paid a total of $1,795, and at the end of this transaction, I owned 100 shares of Riot Blockchain Incorporated, stock symbol RIOT. To help keep track of the transactions and activity, I created a simple worksheet to make it easier for you to follow along. Here you can see on February 7th, my starting balance was $1,795. And then that morning, I purchased the 100 shares using a limit buy order and paid $17.95 per share. So I was debited $1,795 to pay for those shares, and my new account balance is now 0, but now I hold 100 shares of Riot stock in my portfolio. So now step number 1 is completed, and it's actually pretty simple. I just purchased 100 shares of a stock I identified that I wanted to use for a covered call. I used a limit buy order so that I could purchase those shares at a price that I wanted. Well, now that I bought the shares, it's time to move on to step number 2, where I write the covered call and sell the option contract. Here's the transaction record from my account history, where I actually sold the covered call option contract for stock symbol RIOT with an $18 strike price and an expiration date of February 18th. Now, I submitted this order on February 8th, and it was filled later that morning at 10:56 a.m. Pacific time. Now, at the time the option contract was filled, it was currently paying $1.25 per share. So when this option contract got filled, I received a total premium payment of $125. So I updated the spreadsheet to reflect this recent transaction, where on February 8th, I sold the covered call for stock symbol RIOT. It had $18 strike price, and it paid me a premium of $125, so it shows up as a credit. So now my account balance is now $125. But now let's jump forward and take a look at a daily chart to find out what happened on the expiration date of February 18th of 2022. Now, just as a reminder, my strike price for this option contract was $18. Now, as we look at the expiration date, we can see that the stock closed at $16.97, which is well below my strike price of $18. So as a result, this option contract expired worthless, which means the shares that were reserved as my collateral, well, those are released and returned back to me, so I get to keep those shares. So now I went ahead and updated the worksheet to reflect the option contract being expired. So you can see on February 18th, the expiration date, I show that the option contract expired worthless. which means I retain ownership of those shares, plus I keep the full $125 premium payment that I received. Well, now what happens? The option contract expired worthless and I can't move on to step number 3. So what do I do now? Well, now I just sell another covered call and I use the same exact shares. And guess what happens? I get to collect even more premium payment. So here's the transaction record where I sold another covered call using those same exact shares. You can see I sold this covered call for stock symbol RAOT with $18 strike price, and now the new expiration date of March 25th, 2022. I submitted the order on March 8th and it was filled later that morning at 9:16 a.m. Pacific time. Now at that time it was paying 70 cents per share. So when the option contract got filled, I received a total premium payment of $70, which showed up as a credit deposited immediately to my trading account, which I could use at any time now, and that money is mine to keep forever. Well, now let's jump forward in time to the new expiration date of March 25th and find out what happened. Now, just as a reminder, my strike price was $18, and on the expiration date, we could see that the stock price finished above my strike price and closed at $20.76. So in this case, the option contract got exercised and my shares were assigned to the buyer. Well, now that the market price finished above the strike price, the option contract got exercised and my shares got assigned and I received payment for those shares. Let's take a look at the profits now. First, you can see the transaction where I actually sold the covered call on March 8th that had the $18 strike price and a $70 premium payment, so my new account balance was now $195. Next, on the expiration date of March 25th, I've got a new entry that shows that the option was exercised and my shares were assigned to the buyer. And as a result, with that $18 strike price, I received a credit of $1,800. Bringing my new account balance to $1,995. Well, now that I've gone through all 3 steps of this buy right option strategy, step number 1, I identified and bought 100 shares of a stock. Step number 2, I wrote the covered call and sold the call option. And in step number 3, my shares were assigned and I collected payment for those shares. So now let's take a look at the total profit that I received from this buy right option strategy. By reviewing the worksheet, we could see that my starting balance was $1,795. And my ending balance is $1,995, leaving me with a total net profit of $200. And that $200, that represents a return on my investment of 11.14%. So I just walked through all 3 steps of the buy right option strategy and demonstrated how it's possible to make a profit. So what about you? Are you going to make the buy right option strategy a part of your trading activity? Let me know in the comments below if you've already done this and know how to do it, or if this is a new strategy and you can't wait to try it out. And if you join my Simple Trading Room community, you'll get access to my stock picks, plus you'll receive my trade alert notifications. You can join my community by accessing the link I've listed down below. It's discord.simpleoptiontrading.com. I'll see you over there. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.